Well, it's time for our special segment. It's the economy, and today consumer durable stocks, they are in focus as reports suggest that companies have cut prices by around 20%. Anisha joins in with all those details. Anisha?
Well, yes, dealers have been pointing out how the consumer sentiment is weak, and that is the reason the inventory for the air conditioning industry has gone up as high as 3 months in some of the regions. To add to that, there is a margin pressure as well, because remember, because of the high inventory, it is expected that the corporates and the companies will have to take in additional discounting, and that would mean additional pressure on the margins. Do you remember in the first 9 months, even if the top line growth for the industry has been strong, the EBITDA and profit growth has been flat given the margin pressure. In fact, in the last month itself, Voltas saw a margin dip of around 400 basis points. Now, what the dealers are telling us is that due to the fact that the summer is delayed, as well as the cost of imports has gone up, they are seeing a bit of downtick when it comes to the sales as well. And the corporates like LG, Samsung, Hitachi all have had to cut their prices anywhere between 5 to 20%. However, all is not grim. There are dealers who believe that after Holi, sales are expected to pick up. They believe that the summer this time is going to be hot, and that means the inventory will quickly get used up, which is piled on. And also the fact that IPL, etc. is coming up, that would mean additional sales for TV, etc. Voltas, for example, told us that they're expecting that the growth for the AC industry in 2019 summer could be in double digits, as well as the worst of the margin pressure is behind us. In fact, on that note, listen to the industry experts to whom we have been speaking all through the last week and this week to understand how the demand outlook is looking in this industry.
We are towards the fag end of the year as well as the month, and very few days are left. However, as of date, we have been growing over last year, and over the last 2 months also we have shown some growth over the last year. The kind of reports which are floating around, in case that is true and summers are really setting in and we get longer summers this time, I am confident more than between 10 and 15% growth can be seen by the industry.
So, specifically for our industry of appliances, I think more than election, the weather plays a big role, and we are expecting a good summer this year, and I'm sure that is going to definitely boost consumption in a big way, though delayed, but I think it will be a elongated summer, and the temperatures are expected to be pretty high. So we definitely expect a very high consumption of cooling categories this summer. Inverter technology is becoming more and more in demand, and that is going to increase overall ticket price in the marketplace, because inverters in generally are an expensive technology. So that could take up the overall price. But a like to like, if you see vis-a-vis last year, I don't see prices going up. But the mix of premium, the mix of inverter technology could drive the overall ticket size in the industry.
So I think anything which creates buzz in the country has always helped modern retail, helped Big Bazaar, helped many of our formats. I see election in the same space. I think it gets families together, it gets everyone together. I would say, along with the election, there's one more significant thing happening in the next quarter is really IPL. So I think anything which creates buzz for us is good. Consumption definitely tends to pick up. There are more occasions getting created. Our fashion and our snacking business goes into a very, very positive space, upward of double-digit growth. So I think overall, anything which is creates buzz is good for us.
Okay, companies are optimistic of a better summer for consumer demand, but there is no taking away from the fact that the last few months have been tough from a consumer demand point of view. Demand has been fairly tepid, and as our colleague Anisha pointed out, the AC inventory is as high as, I think, 3 months, and many companies reportedly have to resort to price cuts. Let's find out what the outlook is for the air cooler business. We've got the management of Symphony joining in. Mr. Bakeri is here. Mr. Bakeri, afternoon, and thanks so much for speaking with CNBC-TV18. First, if you could tell us, what is the inventory level at the company? How would it compare with, say, historical levels? And is would the company also have to resort to taking some price cuts to clear out the inventory?
The company does not have any significant inventory at this point in time. We did end the previous year with very high levels of inventory, but there still is a fairly high level of inventory in the channel. We are all waiting for the summer to set in, especially in western, eastern, and northern India. It has somewhat set in parts of the south, but the rest of the country, which is the bulk of the cooler market, is yet to witness temperatures which will compel purchase of cooling. But like I said, at the company level, we are doing all right. And in terms of price cuts, Symphony has not resorted to any price cuts whatsoever. It hasn't done that historically. And we are all sort of, waiting for the summer to set in. And we believe the inventory should, the channel inventory should get liquidated, and there'll be a repeat purchase.
How high is the channel inventory? By channel, I presume you mean dealer inventory?
Yes, that's what I mean. If the temperatures, sort of soar, then the inventory can be absorbed in a matter of a couple of weeks. It just depends on how high the temperatures go. And this is an exceptionally, benign March. But
hopefully, just some numbers, sir.
April onwards, temperatures should be back to normal.
Just some numbers. Currently, what is the dealer inventory sitting at? How many weeks or how many months compared to historical levels?
Maybe at the most, we are talking about 2 or 3 weeks of inventory. Really, it's nothing significant.
All right, so Mr. Bakeri,
for Symphony.
Just going by the commentary that you're giving us, Mr. Bakeri, you're telling us that inventory levels, they're more or less normal in comparison to what you've seen. You've not resorted to any kind of price cuts as well. So things are pretty good on the ground, at least for Symphony, from what you're telling us. So that's good news, in fact. Shareholders will like that. Give us a sense then, you were talking about the summer as well. Yesterday, it was, the temperatures were very high here in Mumbai, and it was absolutely, I think that's what will boost sales as well going ahead, the point that you were making. So give us a sense, if you compare, this summer to last summer, what sort of a growth are you looking at, given that you're saying that inventory levels are not too high, you may not have to resort to discounts as well?
Well, the last summer was a disaster. In fact, for the whole year, for financial year 18-19, beginning April 18 to March 19, we have degrown over the previous year, over 17-18. This year, and especially last summer, was an aberration. We believe that anything would be better than that, and even if we have a normal summer, not an exceptionally severe summer, just a normal summer, then we should have significant growth over the previous year. We should be at least back to the 2017 level.
And that was a growth of?
Well, that would be, I don't want to, give any forward-looking statements, but, even if we resort back to 2017 summer, that should be sort of, we're talking about a significant high double-digit growth.
So significant, high double-digit growth. Okay, given that it's coming off a low base, that could be possible as well, as you were telling us. So we have a broad, outlook in terms of the top line. What about margins? It's been very, very disappointing. The first 9 months have been disappointing in terms of margins. What sort of a margin range are you looking at for the coming fiscal, FY20?
Our gross margins were not very much off have not been very much off in this year compared to previous years. It is at the net level where we have been badly affected, and that's primarily because of the degrowth in the top line. Because your overheads in your advertising sort of remains the same. But if we resort back to 2017 sales levels, revenue levels, then the overall margins, net margins, should also revert back to those same levels.
So we're talking about the EBITDA margins. What kind of a number can you guide us out there?
again, as a matter of
broad range.
policy, we do not make forward-looking statements. No, I'm sorry, that would be against our internal policy.
How
The
would you-
numbers are out there in the public domain, what our sales was, what our profit was in 2017. So the viewers can make their own judgment based on that.
Mr. Bakeri, how would you assess the consumer sentiment right now? You've been in the business for a while. You've seen many winters, many summers. How is the consumer demand according to you?
Pretty bad, pretty bad. It's not only the summer or not only benign temperatures, but I would say maybe demonetization, GST, or even the expected conversion by GST of the unorganized to the organized sector hasn't quite happened as expected. So I think the sum total is that the sentiment isn't very buoyant. But in our case, what matters most is our temperatures, and sometimes temperatures sort of override sentiment, and if we have the right temperatures, then regardless of what the sentiment is, we should be sort of doing all right.
Mr. Bakeri, final question from my end. Then I'm looking at your 52-week high in the stock. It's nearly around 1,950 rupees approximately. The stock currently is less than 1,400 rupees. There were murmurs that you could be contemplating a buyback. If you could give us a few details first. What is the current cash in your books? And is there a possibility that your shareholders could look forward to maybe a sweetener like a buyback?
Well, a buyback is something which we have conveyed to our shareholders, is something which is on the table. But the question is, when do we do that? Because you can't have a buyback very frequently. It's a very time-consuming and an enormous process. We haven't really. That's something which the board will decide. But maybe in 1920 or maybe in the year thereafter, it's something which is not. I mean, it's something which will happen in the short term rather than in the long term, for sure. We have about 600 crores or so of treasury on the books.
600
cash on the books.
Okay, just one final question since we are running out of time. How are the input cost pressures right now? Say for the Jan to March period, so far what we've seen, would the pressures be a lot more than what we had in the prior year? And if yes, by how much?
Not really. I believe that our team has managed to contain input costs at pretty much the same levels as last year. So we aren't really seeing any pressure from that end.
Okay, Mr. Bakeri, thanks so much, sir, for joining in and giving us all those details. Wishing you all the best for the coming year. And as you said, you're optimistic. Maybe, in fact, the days that we saw in 2017 could be back in this year as well. That would mean high double-digit growth as well as margins jumping up.
There's a broader statement when asked about the consumer sentiment. He said pretty bad.
Yeah.
And that also sums up, what's happening around us and what we are hearing from the dealer feedback, etc.
Absolutely. And the other important part was in terms of GST implementation, given that there is a large unorganized market. It was supposed to drift in favor of Symphony. That really hasn't yet played out as well. We'll wait by to see in the coming fiscal if that does or not. We'll slip in a short break, come back. We'll get you technical calls on the Nifty as well as some stocks. Ashwini Gujral and Rajat Bose will be with us.